Welcome, hello, this is Dr. Goodvibe from OmegaSupreme.com. What we're looking at today is EURUSD on the 1 minute and the 5 minute charts, November the 5th, 2009. We're looking at today's trades, and we're just going to look at how we made these trades and what happened. So let's get started. Initially this morning at around 7:30, 8 o'clock Eastern Standard Time, New York time, during that session, we notice really price is flat. There isn't much going on the EURUSD at this point in the morning. Then what we're looking for is a volatility trade where volatility is increasing and price is moving, and our strategy is essentially breaking out into a trend. And we want to follow along on this breakout trend as much as we can. So we have set stops, and our set stops are ATR stops here and here. We follow our momentum, our volatility using this indicator as well as this indicator here. It's a very simple and yet very elegant strategy that works for the EURUSD and USD yen quite well. So let's move on forward. What we're looking at is this point right here. You'll see our DCD indicator gives us a very high amount of volatility. This means that price is essentially, the momentum of price is essentially past this particular threshold, and we want to be able to jump into that because it may be the beginning of a breakout and may be the beginning of a trend. If we look at that on a 5 minute chart, we notice that it's the same. It's reflected. The 1 minute chart and the 5 minute chart here show a great deal of momentum in the long area. Now we see that it is breaking the ATR stops at the 5 minute chart, and now we're breaking also the ATR stops on the 1 minute chart. So quite potentially this would be a breakout to the top side. And we see an increase in volatility again, and we're just going to let it ride and see what happens. There might be a large retracement. This could be a fake out, and so it might come back down. So we're going to not jump into this long position just yet. We're going to see what happens in a little bit. It's a couple more bars. We want to see at least 3 bars of support at the top, no immediate retracement. So right now there is 3 bars of support. We're looking to enter maybe even on the next bar. So we enter on the next bar, and immediately within the next few minutes we see a huge increase. Now already we know where our exits are going to be. Our stop losses are going to be this point here or this point here. If you're a scalper and you're looking to scalp out 10 pips, you would choose the smaller ATR stop. So in this case our ATR stop is roughly about 12 to 13 pips. So you would be looking to scalp at least 10 to 13 pips, because you always want to have your expectancy to be higher. So not only do you want to win this trade, so you want to win it, not lose it, but you also want to win more pips than you're willing to lose. And in this case, you will want to win more than the initial 13 pips you're willing to lose here, or the 27 pips you're willing to lose here. Now this is our stop. This is the stop we usually use because we are more long-term trend traders, and so therefore we get stopped out maybe often on this point here and not so much here. So we're going to see it continue. Now price does continue, and at this point you can probably exit with 10 points and 10 pips and you're fine, but we don't do that. We won't exit at that point simply because we're not scalpers. So we're going to see price continue. It is retracing a little bit. Price continues. We see volatility decrease. We see the momentum and the direction decrease a little bit, but we don't exit. So price does break the almost break here and does break here the smaller ATR stop. So had you jumped out at this point, that would have been fine, and you would have either gotten out here, but we would still be in this trade. We wouldn't exit because it hasn't broken the bottom ATR stop. So we're still going to continue, and we're still in this, and at this point, even at this point, we're only about a -6 pips, roughly, -8 if you include the spread. So that's nothing to be too concerned about. That is regular movement. So we move on, continue. Price does reach now this point. Now that's a -8, probably plus spread. That's -10. Again, if you're being conservative with your lot sizing, we're not going to be exiting anytime soon. We don't need to. We started with 10 lots at this point, and we're going to watch this move. Now what's interesting about this indicator is that when this volatility does decrease below the bottom envelope, like as it is here, usually it's telltale of a possible breakout happening at some time very soon. So these dips here and here show that there's quite a large possible breakout that will happen. It doesn't tell you which direction it will break out in. It just tells you that something interesting is going to happen very soon. So now we see a large movement up. We see the volatility increase. We have the momentum and the volatility increase on this indicator. So we've got a great bar ahead. Now we're up, back up about 3 or 4 pips. So we're just going to stay in it because we haven't hit our exit yet, and we're going to continue upward. Now again, we're at 21 pips now. That's wonderful. You can jump in, jump out now. You can probably exit at this point and be very happy with your plus 20 pips. However, we won't. The reason why we won't is because, again, our expectancy was 27 pips should we lose. So should, from where we entered, go directly down, we would lose about 25 to 27 pips. And so we want, although of course you can't always expect that you will get that, you will want to exit a proper area. Now, what do we mean? What do we mean by proper? Well, we watch and we wait, and as you can see here, the 5-minute chart still continues to increase volatility. So that, in this case, on the 1-minute chart where it is decreasing, it is still increasing on the 5-minute chart on our DCD indicator, as well as our XZ indicator. So what this tells me is that this is possibly just going to be reloading. And so it does reload, and the trend does continue then forward and increases more, as you can see here. Now, we exit at this point right here. At this point right there, that is roughly about 39, 40 pips. Now, why do we exit here and not here? Reason why is because if you look at this volatility indicator, it is now at an extreme volatility point, where here it was before relative to here and here. Relative to historical, and I'm talking thousands of minutes, thousands of hours, relative to historical, at this point right here, it is quite high. And so what that means is that there will be probably at least a substantial retracement afterwards. And so we jump out 8 lots out of the 10. So we don't exit completely, we exit a little bit. So we take 80% of our position out and book it as profit. And so mentally we can feel pretty good. 8 lots out of 10, I've banked already at 39 pips. That's wonderful. So what am I going to do with the last 2 lots? So the last 2 lots we leave. We leave the last 2 lots and put a stop loss at this point right here. So why do we do that? Well, simply because we're just going to let the last 2 lots ride, and we're just going to let it continue upward or downward. If it hits a stop loss, it's still profitable, but if it continues upward, we're still going to be able to bank some of the profit on the upside as well. So we're just essentially taking advantage of the topmost, as well as be able to take advantage of taking some profit off the table pretty quickly. So we're going to see price continue, and it does have a substantial retracement, and it comes back up a little bit, and now we're seeing volatility decreasing. And what happens then? We get stopped out. Of course, We get closed at 1.4871. Our 2 lots are closed at this point, so we still end up with a profit of roughly 8 pips, but in this case it could have continued upward, but it didn't, and it closed us out. So we still managed to close 39 pips at 8 lots and 8 pips at 2 lots, with upside potential if it continued upward. So that's this morning's trade for OmegaSupreme.com. This is Dr. Goodvibe. Thanks, and have a great rest of the day.